Hello, it's Forex News for Wednesday, July 28th, provided to you by InstaForex News team and me, Kate Tichina. Investors expect the yen to continue its steady uprise. This puts the authorities of Japan into a difficult situation, as they have already started to make verbal interventions in order to at least decelerate the yen growth and probably to force a further monetary policy easing in Japan. The reason for such behavior of the yen is very simple. The yen is still playing the role of the currency shelter during the uncertainty period in the world economy. Every time when the world investors' confidence over the last months was strengthening, something was causing this trend rebound, bringing to nil every interest the market participants could have had to risky assets. The last and probably the most significant by its influence factor supporting the unwillingness of the investors to risk came in last week, when the chairman of the U.S. Federal Reserve System, Ben Bernanke, confirmed that the U.S. economy recovery had come to a standstill and the FOMC could allow the further monetary policy easing. This is also supported by the released lately U.S. economic data. Bernanke's announcement have not only caused the rates decrease on the stock markets, regardless of the recent series of positive reports about companies' profits over the second quarter, but also have resulted in the lowering of the profitability of two-year U.S. Treasury bonds to a fresh record low of 0.54%. Under the circumstances, the US dollar has become less attractive from the profitability viewpoint. For the world investors, the problem is that if the US economic rehab has decelerated, it is more than likely that the global economic advance will slow down, which means the risky assets will become less attractive. The recently released data could support the viewpoint that in the second quarter the Japanese economy demonstrated the activity uprise. Says the publishing of Tokyo Activity Index in all sectors, which showed a confident dynamics, supported the forecast assuming that the GDP of Japan in the second quarter upturned by more than 1.2% reported in the first quarter. However, lowering of the US dollar-yen pair from the area of 95 to the levels below 87 will eventually hit the economic growth of Japan, especially by the economic sector, which has a great importance for the country's economic recovery. In normal conditions, the increasing worries about the second recession wave in Japan and the appeared again deflation threat would make the yen fall, but not now. In the world, where the leading role again has the attitude to risk and the fears of new recession wave in the world economy, the yen keeps rising as before, and the investors will be turning to this currency as a shelter currency, instead of regarding its rate as an indicator of the Japanese economic stance. It was Forex News provided to you by InstaForex News team. Goodbye.